Hello and welcome everyone for another weekly commentary here from StashAway. I have with me again the honor to have our Chief Investment Officer with us, Freddy Lim.
Hi there.
A couple of things that we want to talk about in the markets. Also have some updates on the next few seminars that we're running. So for Singapore, we have a seminar on the 6th of August. That's a Tuesday, and it will be on financial planning basics. And then in Malaysia, we actually have a webinar coming. It's a live webinar. It's on the 31st of July, and we're going to be talking about investing basics over there. So you can sign up for both of these events through our websites, which you can go to stashaway.sg/events for Singapore events. And if you're interested in our Malaysian events, go to stashaway.my/events as well. You can also find us on Facebook and Eventbrite if that's your preferred choice. So with that being said, right, Freddy, I wanted to get in a couple of things that have been happening this week. Since we've done the video last week, not too much actually has happened, right? The market are still quite muted, neither up or down, right? They're just kind of there.
Well, the news been dominated by racist tweets between
pretty much
politicians and of different parties. You know who?
Yes.
Donald Trump and the squad, and they're probably not interesting for markets. There's no bearing on markets, but makes for good entertainment in the news wire.
It does, right? So this is on the squabbles with Donald Trump this week, right? But there were some more market-specific things, related things that have also happened, right? We had some Fed speakers give briefings, right? Maybe you want to elaborate on these because they always have really high impact, right?
Well, there's a few subtle things that's been overshone by the racial tweets in the US, but really they're subtle and yet important. The first one being that two more Fed governors have starting to come out and more openly express their dovishness on monetary policy, which makes the likelihood for a rate cut in the next meeting by the Fed more likely than before. And also there could be potential for even surprises where the Fed would probably cut more than the usual 0.25%. So if that happens, the market could get some additional sort of a preemptive cushioning from the central bank.
But do you think that those rate cuts could also be interpreted the wrong way by saying, oh, if we rate cut, actually we're doing really, really bad, right, as an economy?
Well, I mean, that's a very good point because if you look at the data in the past, you overlay Federal Reserve overnight rates against the stock markets. It's almost always the case when the rate cut have always seen lackluster stock market performances. However, if I look in detail, you will have realized that in the past, the Fed has always been more reactive than preemptive. And so I would say the data is reflecting that the Fed is just merely reacting to an already slowing economy in the past. However, looking at this time round is really different because the Fed has really volunteered himself preemptively, not because of Donald Trump's political pressure and bantering, but more about being forward-looking and preempting a slowdown in the economy. So it may just be very different this time.
It's very interesting, right? And I think it's a new era, right, that we haven't really been in terms of that. So this kind of happening on the US front, right, in terms of markets. Closer to home, maybe talk a little bit about what people may have not heard or maybe have heard about the Chinese property developers and what's going on there.
Yeah, there's been a continuous effort by the Chinese regulators to continue to clamp down leverage in the system, especially with property development companies. As you know, Chinese companies could be very ill capitalized and yet be very aggressive in their expansion plans overseas and at home. So there's been a lot of restrictions, and also firms are trying to get around it by issuing bonds offshore, and that didn't work because the regulators are now also clamping down and putting on more stringent rules in how they issue bonds and how they fund themselves. So they're really trying to crack down on the weak players in the Chinese property development sector. However, having said that, it's not all bad because there are companies in China that has better balance sheet and holding power. And these are the ones that we find it very, very cheap to buy what other people are fire selling.
Yes.
Right, the guys like Bunker and Coley and a few other big ones, they could very well capitalize on this down cycle. So it's not all bad.
No, I think maybe you can chime in on this, right? But this is actually, it's the whole point again, right? Of being diversified, right? This is one sector of a market, and this can be part of your net worth, right? Or part of your investment strategy. But being overly exposed to this sector means you're riding these waves, right? Like it goes down, it's maybe go bankrupt, right? Or and things like that. But having this, it's same with the earnings releases right now, right? Like if you're in a Netflix, it will be going down right now, right? But if you just own the technology side, then it will be fine.
I think I will go further than that as well. We've seen a lot of biases when it comes to investors, home buyers at home. That's one sort of bias that creates concentration. And then you have the sector biased, which is the other one. And so there's a lot of biases that we incur in our daily lives, and we sort of negate our diversification in our portfolios. So we should just keep that in mind, and sometimes just being mindful and reviewing our portfolio periodically, right? So at StashAway, obviously, our portfolio is highly diversified, and China's weighting in our portfolios is about 35% on 15.
Yeah.
It's barely 5% in
and then property developers is even less.
So with a very diversified approach, we don't have this Elon Musk smoke weed on radio problem right? If you're Tesla investors only, then you have the problem. With a diversified portfolio, you don't have that problem. Right. So let's just keep that in mind and review it periodically.
Yeah, I think the periodically reviewing of that is very, very important, right? Okay, thank you so much, Freddy. I think we'll wrap this up for this week. If you have any questions, you're listening to this over the weekend, feel free to post any comments and questions down below the video. Otherwise, always feel free to reach out to us at support@stashaway.com, or within the app, you can even use the WhatsApp function that we have there. So we're always here for you, should you have any questions or concerns, and happy to answer all of them. So to everyone, have a great weekend, and we'll be back with you again next week. All right, bye-bye.
Okay, short and sweet.
Short and sweet, exactly.
Well, less than 10 minutes now.
Yeah, 9.
Cool.